All right, so this is another add-on video. For the people that's having a hard time trying to trade this system on a 5 minute, that can't really spot supply and demand very well on a 5 minute, because I understand everybody see the market completely differently, and you know what I'm saying, you're just trying to fit your trading style, your personality into it. So this video is for people that's really having a hard time seeing supply and demand on the 5 minute or the 15 minute. So if you're having a hard time seeing it, you can just trade the 1 hour chart alone. You don't have to look at no other time frame. You can look strictly at the 1 hour. Okay. All the rules apply. We wait for key levels to get reached, either support and resistance or supply and demand, or we wait for smart money engulfs on a key level. All of the stuff applies to the 1 hour. Okay. So I'm gonna walk through some setups, and I'm just gonna show you that all this stuff still apply, even trading ranges. Okay. Now let's just get into it. So right here we have a setup exactly right here. What do we have? We have aggressive buying starting from over here, shot up and then came right back. Okay, so we would draw up that general area. Okay, now the good thing about trading the 1 hour just alone, you're gonna have less fake outs as far as your entry points. Okay, because this one candle is 1 hour. Now the 5 minutes, sometimes it might give your entry a break of a high of a candle, and then it might wick you down and then go in your favor. With the 1 hour, that's not going to really happen that much, because this 1 hour candle is, you know, like, it's a lot of candles within this 1 hour candle. So you're going to kind of avoid those little pointless losses when we trade on a 5 minute, because I understand that you can be in a supply entry, it start dropping, and then it might go back up, wick up, and then go right back down. So with the 1 hour, that kind of eliminates those pointless losses. Okay, so that's the advantage. The disadvantage of trading the 1 hour is you're not going to get a lot of setups. You might have to babysit the market a little bit, because you don't know when your setup is going to happen. It's not guaranteed that your setup is going to happen when you want to trade. You know what I'm saying? So you kind of have to babysit just a little bit. But yeah, this is gold. So this is, you know, these setups are going to happen throughout the day. You just have to be prepared. Now we have demand right here. Aggressive buying, investors bought right here, push the market up. They have to come back to fill in this these areas to fill, because look, we have no pullback, we have no pullback up in this area. Let me draw these little rectangles out. So we have that little area, no pullback, this little area, no pullback. So that give you confidence that it wants to come back. Okay, now I don't know if this is a level. Is this a level? This is actually a level. That's crazy. So let's mark this up, because that's the swing low. Okay, that's the swing low. But honestly, I don't think I would use this, because this is too far back. This is not guaranteed that this will get respected. It just will happen to get respected. I wouldn't feel safe about this, having this swing low right here, because that's, how many days is this? This is like a week. Like, no. But it ended up playing out. I just like using recent price action, because that is more accurate. So right here we have demand. It comes back. You will enter the buy as it break above this yellow candle. Okay, and enter the buy. Your stop loss will be up underneath this wick, or you want to be completely safe, have it underneath there. But since this is the 1 hour, I'm going to have my stop loss right here. Okay, so as always, we get our regular 1-to-1. 1-to-1. What is that? 68 pips. And then we look for our swinging, or our runner to be, you know, our target. So again, on my last add-on video, you get to choose two things that you want to go for as far as runners. You either want to have areas to fill. So that little black candle, it only pulled back just a little bit, but that little gap right there, that has to get filled too. So you can fill that in, or you can try to go for the liquidity. You know what I'm saying? So it's up to you whether you want to go for areas to fill or liquidity. Up to you. But either way it go, when you trade in the 1 hour, this is going to take some time. You got to give your trade some breathing room, because if you instantly move your stop loss to break even after 1-to-1, you see what happens as soon as you slide it up. As soon as you slide your stop loss up, it taps you, then go get liquidity, or then go fill an area. So you just have to be aware of that. Okay, I'm just going to keep walking through setups so you can understand that the 1 hour moves exactly like the 5 minute and the 15 minute. It just kind of subtracts those fake outs, because the 1 hour is kind of straightforward. and you can see supply and demand very easy. So what do we have? We have demand again. We got a fast push, pull back to fill to get some more investors in. Our buys will be right here as soon as they break above that candle, and we got a good tight stop loss. It's all about the candle size. So that candle size is very small. So now we get our quick 1-to-1. What is that? Almost 50 pips, and then we're looking for areas to fill or liquidity. Now liquidity is sitting up here, but also you got to remember, when you enter a trade, you are part of liquidity too. So these candles right here, it wicked below here for a reason, because people stop losses right here. That's why I don't recommend buy limits or sell limits, because if you get in aggressive right here and you put your stop loss right here, the market knows that your stop loss is right here. So what they're going to do, they're going to wick down and then go back up. So that's why it's kind of good that we wait for the break of high and the break of lower candles. Okay. So for right here, we got a 1-to-1. Now we have this little gap to fill. We have liquidity up here, and we have this gap to fill. Okay. Well, we'll have like this gap to fill after we get our 1-to-1. So we'll have that much to fill. So it's really up to you. However long you want to wait this. You want to wait until this area get filled, or you want to wait all the way up here to get like almost close to 1 and 3 risk reward. Okay. Now again, this stuff is going to take quite some time. Okay. So you have to be patient. This is not the 5-minute or the 15. This is the hourly. Okay. Now this is a mixture of demand and support. Okay. So we have aggressive buying coming from this area. We see the movements coming from this area. Just look at the candles. And then we also have a swing high. Okay. We have a swing high right here. These two is in combination with each other. So we have aggressive buying, it pulls back. We're waiting on whichever level get touched. Now this level got touched by the support, but did it ever break above candle highs? No, until right here. That's why the 1 hour can really eliminate those pointless entries on a lower time frame. Don't get me wrong, I'm a natural scalper, but if you really want to like try to take off those pointless losses, trade the 1 hour alone, and you're going to see like these entries, you can get sniper entries. Okay, so right here it broke above this candle. As it's breaking above this candle, either you want to have your stop loss tight, or you want to have it below the zone. It's really up to you, but I'll probably have mine tight, especially after this candle close. After this candle close, I'm definitely sliding my stop loss up and just letting it run. But yeah, let's just keep going, because you're gonna keep seeing this setup. We got another demand entry right here. Remember, general area. It don't have to be just this blast down candle. That's order blocks. I like to do the entire zone. Okay, that's how I trade the entire zone, because the market is just not perfect. It's not gonna just come down here automatically. Even though this setup came down here to a T, I'll do the general area, because we still wait for this candle to break. Okay, so same thing, another demand, break above, stop loss underneath that wick. We want a tight stop loss. This is almost a 40 pip stop loss, and we're looking for areas to fill. So let me delete this. Okay, yeah, all this stuff is the same stuff. Okay, and you could just see it more clearly. So we have that little gap right there that I have to get filled, and we have liquidity. So it's up to you. But again, we always go for our 1-to-1 right here, and that would be it. So our next target would be liquidity sitting above here, because this is a high that haven't got touched. So that would be liquidity. So that would be a runner right there. Okay, we'll take this off. Now, when people get confused, like say you see supply, this is aggressive selling right here. This is aggressive selling. Now, you have to zoom out a little bit and see what has happened, because if you're selling right here, mind you, you didn't get no break of a candle, and it broke above the supply. So again, if a zone get broken through, I wouldn't consider that a valid supply and demand. We don't want candles to be breaking. We want it to be wicking. So in this situation, we have supply, aggressive selling. Okay, it never came back to that zone until right here. But when we got to that zone, we have bullish candles that's disrespecting this zone right here. After I start seeing candles close above, and it's taking a while for it to break candles, it broke right here. But once I see that this candle pushed up like that, like, see, you have to read candles by candle when you get into supply and demand entries and see what type of candles are printing. So say if we did get into this, right here, now stop loss be right here, and we're looking for our regular 1-to-1, right? As I'm looking at this, let me move this over. As I'm monitoring this trade and it's like going in my favor, as I see this candle close like that, I'm going to get out. Because for one, that's a smart money engulf. You see how it wicked below and then closed above. That's just showing his hand. So on a lower time frame, this is the one on a lower time frame, they just grab liquidity. Really think about this. If they wick down and closed above on a 1 hour, on a 5 minute, that's them grabbing liquidity to go back up. So as soon as I see this, I'm getting out of the trade, and I would take my loss because I know that they're about to go back up. Okay. So this will be a loser, but you have to read the candles. You have to really pay attention. Is this an engulf going against me? Is it an engulf going in my favor? You have to pay attention to that. Okay. That's why I recommend people to know the candlestick patterns before taking my course, because if you can't read price and know that this is not going in my favor, you can't cut losses quickly because you don't understand candlestick patterns. You know what I'm saying? So let's just keep going through setups on a 1 hour. So what do we have right here? We have regular support, just the same thing. Okay, we're waiting for the high of candles to be broken. It never got into that zone until right here. So this will be an entry. That little doji would be an entry. Whether you want a tight stop loss or you want it underneath the zone or you want it underneath that low, it's up to you. I'm going to have it like right here. And what are we looking for? We're looking for areas. Well, obviously we're going for our 1-on-1 as always. We're trying to grow our account. And then we're looking for areas to fill. So we're looking for that. We're looking for swing highs, swing lows. What do we have? We have equal highs right here. Now, again, this is the 1 hour. So this is going to take quite some time. Like, I don't even think some of y'all are built to hold this trade for that long. But if you can do it, when you get to the end of it, you're going to be getting paid out like ridiculous. This is a 312 pip target right here. If you want to really leave it for 3 days, if you built like that, do that. I'm not built like that. I want my money that day. So yeah, that's really up to you. Okay, let's take this off. And the same thing, remember when I said we need 3 touches in the range? So we have so we trying to get as much price action within that range. So this right here, if you want to do your zone like this, mind you, this is a key level right here. This is a key level. Like, say if you are on the 5 minute and you up in here, you can get a sniper entry right here on the 5 minute, just right here alone. If you can get to that area on the 5 minute, perfect. But if I see that it's really creating a range, I'm gonna mark this level up like this, and then I'm just gonna just only trade up in this area. So what do we have? Let's just use this one. A break above this candle. Break above this candle. Have a buy. And then we get our regular 1-to-1, because this is a range. We want our 1-to-1. But since we're on a 1 hour, the ranges might be a little bit bigger. So you can get even better risk rewards, because ranges on a 1 hour is going to be way bigger than ranges on a 5 minute. Okay. So what do we have right here? We have no areas to fill. Really look at this price action. Everything have been covered. So the only thing that makes sense is to go for liquidity. Because if you look at these black candles, they had all pullbacks, all of them. So we're going to go for, let me take that off. We're just going to go for liquidity at this point for a runner. That's the only thing that makes sense. And that was a 1-to-4 risk reward. Okay. So let's just keep going. I'm gonna show a few more examples, but the 1 hour is just way more cleaner price action. You can see it way more clear. Okay, like right here, this is demand. What is going on? Oh, I clicked the wrong thing. Okay. So this is demand right here. Now this setup right here, you got to be careful, because if the 1 hour entry candle is too big, pass it up. Look how big this candle is. Okay. Be very careful when you want to trade just the 1 hour. The entry candle matters. Look at how big this candle is. Your stop loss have to be up under here. So that means you're risking. How much are you risking? Let me see. You have to be picky when it comes to the account. No way. You're risking almost 122 pips to gain what? Like, no, that doesn't make sense. You have to be smart about it. Okay, if your entry candle is way too big, your stop loss is way too big. We're not trying to blow our account. So that is not smart at all. So right here, pass this one up. Or if you want to be really precise, this little area right here, go to the 5 minute, find an entry. Okay. If you want to get real sniper, you want to use supply and demand on the 1 hour, then hop to the 5 minute and get greater risk rewards than just 1-to-1. Because that's the real sauce. If you can use higher time frame supply and demand and then hop to the 5 minute and try to find an entry, you're going to get way better than just a 1-to-1 risk reward. Okay. So what we have right here, we have areas just being filled. This is also inverted head and shoulders. I love this pattern. As soon as it break above, we buying, and we have areas to fill. So what do we have? It broke above that yellow candle, came back, and then this yellow candle broke above that. So we put our stop loss up under here, and we're looking to fill in that area to fill right here. All of this have to get filled. This have to get filled. And this have to get filled. And that's exactly what it did. Okay. No, it didn't have no pullbacks. No pullback. So if we see an inverted head and shoulders, it's about to mirror itself. That's exactly what's about to happen. Okay. Okay, what do we have? Let me see. Now this looks like an inverted head and shoulders right here. That look like inverted head and shoulders. That like the head. I mean, not inverted, but regular head and shoulders. That like the head, left shoulder, right shoulder. Then it drop. Okay. It didn't touch that zone. But if you start seeing price rejecting from it, take that sell. Take that sell. And then what we have down here, we have liquidity down here. Liquidity down here. Take this off. I'm just take off everything on the charts. So inverted, go to head, left shoulder, right shoulder. It didn't touch it, but that's okay. And we have right here and right here. We get our regular 1-to-1, and we're trying to grab liquidity for those traders that took that buy. Okay. And then over here, even over here, we have what? Support. But you got fucked over. What is this? 8 a.m. That probably was news. But if you would have took this buy right here, you would have got tore up, because that had to be news. And what did they do? So if you would have took that buy, it would have stopped you out. And this is still, even though you lost, let's be real, you lost, you still have another opportunity to get in. Now, I'm gonna be honest. If I see an extreme wick like this, I'm not gonna put my stop loss up under here. I'm not doing that. I'm putting my stop loss at the zone. And then once it break above that candle, because I know that they have the money now. Like, think about it. If this 8 a.m. it didn't want to close below the zone, and it closes above the zone, they have the money right here. You're with the money right now. So let's start taking out other traders. So what we have, equal highs right here. That's money. This is money, and this is money. Okay, so these are major take profits right here. So we get our regular 1-to-1, and then runners, we're looking for areas to fill or liquidity. It's up to you. We can go right here and get that, or that's some patience right there, but that's definitely a take profit. So that's all I wanted to share today. All of this stuff applies, regular stuff, you know what I'm saying? Support and resistance. We're looking at the wicks. We're looking at the supply and demand. We're looking at trades that get stopped out and we'll take profits. It's going to be always a 1-to-1, and then we're leaving a runner. We're looking for liquidity for us to go towards liquidity, or we're looking for areas to fill to leave the runner. Okay. So yeah, I'm gonna go through one more because I really want y'all to get this. I really do. So what do we have right here? We have demand right here. And did it ever come back to demand? Absolutely not. It never did. But we have a swing high right here. It breaks structure and pulls back. It never pulled back to this demand, but it pulled back to this swing right here. And pulled back to this swing. Okay. So what do we have? Did it ever break above candles? It broke above. Let's zoom in. That didn't break above this candle. It didn't break above this candle. Okay, it finally broke above this candle. So we had to be patient. It finally broke above this candle. So our stop loss will be beneath this candle, or if you want to be real safe, this candle's up to you. Okay, it's your choice. And we're looking for our regular 1-to-1. As always, like I said, we're growing our account. And then what's the next thing we're looking for? The runner. The runner, money over here. We have money up here. We have areas to fill right here. So you should be confident to lead that runner and don't be attached to the trade. Walk away from it. You got your 1-to-1. Let's just lead this runner so we can get some more of this, okay? Because like I said, equal highs, equal lows, swing highs and swing lows are liquidity, okay? So they have money up here and up here. So leave that runner. Just trust into it. Just trust it, bro. I'm telling you. When you like if you wake up and you're up a couple thousand, you're gonna want to leave runners all the time. I'm telling you. But yeah, that's all I got for the 1 hour. All the rules apply. It's the same stuff. It just the 1 hour it's more clear, in my opinion. It's way more clear. You just get less setups, but I feel like it pays out a little bit more. You just gotta be a little bit more patient. All right, that's all I got. Till next time.